Hey guys, Tony DeNaro here. Welcome back to the channel. This morning I put out a YouTube short, about a 30-second video, talking about the difference between investors and traders as I define them. And I really think if you plan on hanging around this channel or trading in the stock market for any length of time, this topic deserves more than a 30-second discussion. So if you could indulge me for just a couple minutes, I want to give you a feel for how I define these and why it is important to understand the difference, especially as we have conversations going forward through the rest of 2023 and into ongoing years. Let's kick it off. I think that there are a lot of terms which get thrown around interchangeably, and they're not really interchangeable. The words investor, trader, speculator. At times, some of us are all of these, and there is nothing wrong with being any of them, and there is nothing wrong with being all of them. But I do think that you need to understand when you enter any play, which role are you in? Every play has a different role. Some plays you're a speculator, some plays you're a trader, some plays you are an investor, and you cannot mix those terms when you're analyzing how you got into a play, why you're in a play, and how long you are going to stay in a play. Let's talk about what is an investor. Again, these are just my definitions. It's okay if you don't like them, but I notice as I'm browsing through Twitter and Reddit, a lot of people call themselves investors when their actions and what they're typing really categorizes them more as speculators or traders. And we're going to talk about some of those examples in just a second. I think if you can wrap your head around these concepts and embrace these definitions, it will help you be successful in your investing career. When I talk about what is an investor, this is someone that reads financial statements, understands the fundamentals of the company, understands where the company is going and what risks the company is facing, both competitively and financially, if there are any. The second thing that happens for an investor is after you look at those financials, fundamentals, and risks, then you go to the stock chart and you compare and see, is the current price of the stock fundamentally in the right place to buy it for a long-term investment. For example, I have Costco up on the screen right now, and you might say, well, at any point, Costco is a good investment. Maybe so, and if you're planning on holding it for 30 years, that could be the case. But I don't know that the people that bought at $608 in March of 2022 feel like they really invested right now. They're down almost 20%. I am looking at adding some Costco, and I have analyzed the fundamentals, and even at $493, in my analysis, Costco is still overpriced. So as a value investor, to hold this thing for the long term, and knowing from my own analysis of the financials and the ratios of the company that it is overvalued right now, and it is most likely going to come down over the near-term future, I am going to wait to invest in Costco. The other category, and I fall in this category myself many times, is a trader, also called a speculator. There is absolutely nothing wrong with being a trader or a speculator. When we are doing momentum trades or day trades, we are trading, speculating. Let's go through how I define a trader. First and foremost, traders are buying on momentum almost every single time. The second thing when we are trading is we are not typically looking at fundamentals or financials. We are piling in on momentum, trying to take advantage of that. The third thing in my mind that identifies a trader over an investor is you're not trying to seek out a value-based price. You are just trying to hop on that momentum and ride it up as long as it can go. Okay, so you say maybe those definitions make sense. Why does it matter how I consider myself in any given play? Am I an investor or a trader? If you are an investor and you've analyzed those financials and all the filings and you've done some discounted cash flows and you have determined what is a value price to buy the stock at, if it were to come down to that price, you're going to buy it at that price. And if it drops below that price, you're going to probably buy more because you've identified a value price for a long-term hold. Investors have also carefully analyzed the management of the company and understand the company roadmap, and they don't plan to trade in and out of the stock. They plan on making this a long-term investment, maybe until retirement or until it reaches a price where it is now overvalued and you want to capture those profits, rinse and repeat. Sometimes that can take many, many years. Now let's talk about traders or speculators. And again, there's nothing wrong with being a trader. I am one almost every single week in different plays, but a trader gets into plays for different reasons and they don't look at financials. And I have GTII up on the screen because it's a good convenient example. Back in August or September of 2022, it was trading at 45 cents and people started piling into this stock and it ran up all the way to $8.97, a fantastic momentum trade. But anybody who actually looked at the financials before piling into GTII knows that they basically have no revenue, no income. The way that I look at it, when you are buying a stock that has no income or negative income, you have become a trader, not an investor. There is no real good way to evaluate what is a value price for this stock. And the people that bought at $2, $3, $4, $5, $6 on the way up or even on the way down on all those red candles, they didn't have really a good way of knowing, is this a good price for this stock? They were hoping to get a bounce off of that momentum. And, you know, if you waited all the way down here to the bottom to 50 cents or even $1, there has been some bounces. So for some people that did work out, but there's still not really a way to value this stock because they have no income. There are some deals that are being worked of this company acquiring other companies, and maybe that will translate into some meaningful way to evaluate the price of GTII. But until we see all the financials of the company that they're acquiring, it still is a speculative trade. One other quick example for you, CRTD, the company name is Created. You could have bought this stock for 7 cents in October, and it got very popular for a while, and a lot of people got behind the CEO for a while. It ran up from 7 cents all the way to $1.69. But people weren't buying this stock because of any financial analysis. If they had done any, they would have seen that this company has a long history of negative net income. And on their balance sheet, when we look at that, we've got total current assets of $1.68 million, total current liabilities almost 8 times that at $15.17 million. This is a huge imbalance of liabilities versus the assets they have to cover those liabilities. And to top that off, we have a total stockholders' equity of negative $9 million. There are a lot of problems on the income statement and the balance sheet that didn't justify this kind of run-up, and that is why the price is coming back down now to where it started before the momentum traders got on board. Now, there still are a lot of believers in this company. They call themselves investors, but if they were investors, they would have understood all of the risks and all of the problems in the financial statements, and they would have not bought in on that FOMO run up. They would have waited for it to come back down. An investor would have known that the company has negative 4 months of cash left. An investor would have looked at all the filings and seen the warrants and the convertible debt and know that because of the financial condition of this company, that dilution was going to be inevitable either through an equity raise or conversion of that convertible debt into shares. All of that means that there is going to be negative pressure on the price, and the higher the price gets, the more the company is going to be tempted to do dilution, or that those debt holders are going to be tempted to convert the debt into shares. All of that is dilution. All of that is negative price pressure. Does this mean that we blame the CEO of Created for the dilution or the conversion of debt or the warrants being exercised? Absolutely not. Those were out there. And if you are momentum trading it, that's fine if you didn't look at them. But if you are an investor, you call yourself an investor and you get mad at the CEOs, it is incumbent on you to understand the financial condition of the company, the financial statements, and what potentially could be coming so that you can make some good decisions about when to enter or when to exit a play. And this is something that I talk about on this channel almost every week. If you're a momentum trader, get in early and get out, because there's probably something you don't want to see in the financials. And if you missed that momentum and you just love the company anyways, it's okay to wait. Always wait for a good entry. These stocks always come back down to what the real value of the company is. I understand that this might be considered harsh talk to some people when you're hearing this message, but please take it in the good intent in which I'm trying to deliver it to you to help you become a better trader or a better investor going forward in the future. The past is the past, guys. All we can do is learn from it and try and become better educated and know where we're at in a play. Are we a trader or are we an investor? Let's be honest with ourselves and use the right terminology to analyze ourselves. Where did we get in the play? Why did we get in the play? Were you an investor or were you a trader? Bottom line, investors are going to identify a good entry and always wait for it. Traders are going to jump in without really looking at anything. And if you are a trader, and especially if you are entering that trade as things are running up, really running up, you better have an exit plan as you're getting into that trade, because things don't always work out as expected. And when the financials of a company are not sound, things can come down really quick, like we saw with GTII and CRTD. I am Tony Denaro. Thank you for watching. Don't forget to buy and hold that subscribe button, and I will see you on the next video.